Good day, friends. Today we will discuss various purposes of valuation. Though there are many purposes of valuation, and the valuation depends upon the purpose. It will change the with the change of purpose. We will confine to the purposes which are as per IBBI syllabus. So first we will discuss about the syllabus. Syllabus as far as IBBI is concerned, various purposes of valuation you have to learn valuation of properties for purposes such as bank finance, auction, reserve, building insurance, sale, purchase, valuation disputes in court, probate, partition, rent fixation, stamp duty, capital gains tax, valuation as per rules 11 UA of the Income Tax Act 1961, lease and mortgage of property, any other purpose is not referred above. Then valuation standards as per provisions of Companies Act 2013. Then Indian accounting standards, you have to learn Indian accounting standard 16, Indian accounting standard 36, Indian accounting standard 40, Indian accounting standard 113 as applicable to the valuation. Then valuer as an expert witness in court. Then you have to learn valuer's function and responsibility, errors of judgment and professional negligence. So as far as weightage is concerned, weightage is 3%. So now we will discuss various purposes one by one. So purpose of valuation for generally as a valuer you have to do valuation for bank finance. Here the purpose is to determine the collateral value for loans. So which method you may apply? You may apply comparable sales approach, you may apply income approach, cost approach depending upon the type of property you have to value. For example, a bank assess a residential property at rupees 50 lakh for a home. Then for auction reserve, here the purpose is for setting a minimum auction price. So whenever then any auction is to be done, then the valuation is to be done by the value. So the method you may adopt is market value with a comparative bidding perspective. Here you have to find. So for example, setting a reserve price of rupees 1 crore for a commercial building for auction. Then building insurance. The purpose here is to determine the estimating replacement cost for insurance coverage. So whenever a building is insured, you have to pay premium for that, and that premium is based on the basis of the replacement cost of the building for insurance coverage. So method here is replacement cost approach. So for example, valuing a building at rupees 75 lakh to cover reconstruction expenses. Then for the purpose of sale, so here the purpose is to determining the market value for selling. So here you may apply sales comparison approach, cost approach, or income approach as the case may be. For example, a house is valued at rupees 60 lakh based upon recent sales of similar properties. So purchase, if you have to do valuation for purchase, here the purpose is for assessing fair market value for buying. Whenever a buyer approaches you to do valuation, he has to buy a property, so then the purpose will be assessing fair market value for buying. Then the method may be comparative market analysis. So for example, advising a buyer to purchase a property valued at rupees 55 lakhs. Then you have to do valuation disputes in court. Here the purpose is resolving legal disputes over property value. So method here is you have to apply detailed appraisal and expert testimony. Expert testimony means you may have to appear in the court to for testimony as an expert. So, for example, providing core testimony on a property's value at rupees 8 lakh, 80 lakh during a legal dispute. Then probate, so here the purpose is assessing property's value for estate distribution. Whenever there is, you have to do a estate distribution valuation for estate distribution. It is called probate. So the method market value, you have to find market value as on the date of death, so of the deceased. So for example, valuing a deceased asset at rupees 1 crore for probate. Then for partition among the co-owners, you have to do valuation, and the purpose here is equitable division among the co-owners. So method is market value valuation considering subdivisional potential. For example, dividing a family farm valued at rupees 2 crore among its siblings. For then you may have to do rent fixation. So generally it is called standard rent. Standard rent is a rent which is as per law, standard rent. So every state has a procedure for standard rent which is given in the Rent Control Act of the state. So here your purpose is determining fair rental value of the property. So method analysis of local rental rates. For example, fixing rent at rupees 225,000 per month for an apartment. Then for stamp duty, when whenever immovable property is registered, then stamp duty has to be paid. That stamp duty is paid generally on collectorate rate. Maybe you may have to find out the value in case of any dispute. So here purpose is for assessing value for stamp duty calculation. In many states, values have been appointed for calculating the stamp duty. So you may have to do valuation for stamp duty calculation. Here the method is market value as per government guideline rates. This is important. You have to apply government guidelines rates which are given, which are also called collectorate rates of that particular area. For example, valuing property at rupees 1 crore for some stamp duty during sale. Then for capital gains tax, whenever an immovable property such as land, building is sold, then the seller has to pay a capital gain tax on the profit net. Then here the purpose is calculating tax on sale profits. Then method market value assessment and cost basis calculation. So here a particular procedure is applied in case of capital gains tax. So all those persons who are registered with CBDT, they know how to calculate capital gain tax. For example, assessing a sale at rupees 1.2 crore against a purchase of 80 lakh. Then valuation under rules 11 UA of income tax 1961. So this act particularly prescribe the methodology for determining the fair market value of unquoted equity shares. So what are unquoted equity shares? Unquoted equity shares are the shares of a company that are not traded on a stock exchange or other organized financial market, and certain other assets for taxation purposes. For example, this will be cleared with this example. So where the valuation methodology is that fair market value of unquoted, as we have already discussed what are unquoted equity shares, is calculated by using the formula A into P into C into D minus L divided by PE into PV. So what is A? A is book value of all assets. Book value of all assets, but here you have to exclude specified assets like jewelry, artistic works, shares, securities, and immovable property of the company. Then B is market value of jewelry and artistic work. based upon the valuation report from a registered value. C is fair market value of shares and securities as determined by the rule. And D is value adopted or assessed by any authority or of the government for stamp duty purposes. L is book value of all liabilities, excluding certain specified liabilities. P is paid up equity capital of the company. PV is price of equity shares corresponding to the consideration received from any non-resident entity. For example, let A is 50 lakh, B is 10 lakh, 10 lakh is the market value of jewelry and artistic work. C is 30 lakh, fair market value of shares and securities. D 20 lakh, value of stamp duty, value for stamp duty purposes. L is 15 lakh, book value of the liability. P is 10 lakh and PV is 25 lakh. You put all the values in the formula which we have already discussed: A, B, C, A, B into B into C into D minus L divided by PE into PV. So put all the values. The value of unquoted shares would be 7 crore 46 lakh 7 746.25 lakh. So then valuation for lease and mortgage of the property valuation. So here the purpose is establishing value for leasing or mortgaging. So method market value with generally we apply with rental income considerations. Example, valuing a commercial property at 1.5 crore for mortgage. Other purposes maybe other various other needs like financial reporting, legal settlements. So there may be many other purposes. So here the methods will be tailored to the specific requirement. So we cannot have a particular method. This method will be depending upon the requirements. For example, valuing a corporate office for financial reporting at rupees 3 crore. Then valuation as per Companies Act 2013. So Companies Act 2013 outlines provisions for valuation of assets, including the requirement for valuation to be conducted by registered value. Here are the key points. First, who are registered valuers? First thing you know, registered valuers are those valuers which are registered with IBBI. Only those persons can do valuation under Companies Act 2013. So valuation must be conducted by individuals registered as valuers under the Companies Act, registered valuers and valuation rules 2013. Then valuations have to be done impartiality and fairness. You have to apply valuation must be impartial, true and fair. Then diligence has to be applied by the valuer. Valuer must exercise due diligence while performing their functions. Then compliance with the rules. Whenever you are doing valuation under Companies Act, you have to conduct it in accordance with the prescribed rules. For example, let us consider a company that needs value of a property for merger under Companies Act. And then what will be the procedure? First step will be appointment of valuer. The audit committee appoints a registered valuer to conduct the valuation. Then valuation process. The valuer conducts a thorough inspection of the property. First thing, he will carry out a thorough inspection of the property, will gather relevant data and uses internationally accepted valuation standard to determine the fair market value. And then he will submit a report. That valuer will submit a detailed report to the company, including the valuation methodology, assumptions and conclusions. Then what is impairment? So let us suppose ABC company based in Delhi purchased a building many years ago at a historical cost of 25 lakh. It has taken a total of 10 lakh in depreciation on the building, and therefore rupees 10 lakh is in accumulated depreciation. So the building's carrying value or book value is 25 lakh minus 10 lakh, 15 lakh is the company's value in the balance sheet. So let us suppose an earthquake damages the structure significantly. So the company determines that situation qualifies for the impairment testing. So after assessing the damage, ABC company determines that the building is now only worth rupees 10 lakh. But in the books of account, its value is 15 lakh. So the building is therefore impaired. So an asset is impaired when its market value is permanently lower than its book value. So this will be used in when you are doing valuation under Indian accounting standards. So we will discuss as the case may be. So valuation under Indian accounting standard AS 16. So it deal with property, plant and equipment. So we generally may call it PPE. So the purpose it prescribes the accounting treatment for property, plant and equipment to ensure users of financial statements can discern information about entities, investment in PPE and changes in such investment. Recognition, how it is recognized: initial costs and subsequent costs are recognized as part of assets cost. So measurement, how it is measured: property, plant and equipments can be measured using the cost model or the revaluation model. Depreciation, you will be applying depreciation to all these things. Depreciation is charged as the depreciable amount of an asset over its useful life. So impairment we have already discussed. Assets are reviewed for impairment when there is an indication that they may be impaired. So what is impairment? We have already discussed. Next is Indian Accounting Standard 40. It deals with investment property. So purpose here is specify the accounting treatment for investment property and ensures that user of the financial statement can discern the information about the entity's investment in such property. So how it is recognized? Recognition: investment property is initially measured at cost, including transaction cost. So how it is measured? After initial recognition, investment property can be measured using cost model or fair value model. Disclosures: so entities must disclose information about the investment property, including the methods and significant assumptions applied in determining its fair value. Then Indian Accounting Standard 130, it deals with fair value measurement. So here the purpose, it provides guidance how to measure the fair value of the property and require disclosures about the fair value measurements, that how it has been calculated. So what is definition of fair value? You already know. Fair value is a price that would be received to sell an asset or paid to transfer a liability. So here when you are doing fair market value of an asset, it means price that would be received to sell an asset. And when you are doing it for a liability, then paid to transfer a liability in ordinarily transaction, not under any stress. So between market participants at measurement date, means as on the date of valuation. So valuation techniques that what which you can use is it including market approach, cost approach or income approach depending upon the situation. So disclosures: entities must disclose methods and significant assumptions applied in determining the fair value. So role of valuer as an expert. Well, expert testimony. The valuer provides an expert opinion on the value of the property based upon their specialized knowledge and experience. Evidence presentation: the valuer presents factual data, methodology used, and the reasoning behind their valuation. Assistance to the court: the valuer helps the court understand complex valuation issues, enabling the judge to make informed decision. For example, in a divorce case, the court may need to determine the value of jointly owned property for equitable distribution. A licensed valuer would be called as an expert witness to assess the property's current market value, considering factors like location, condition, and recent sales in comparable properties. Functions and responsibilities of the values. What are the functions and responsibilities of the value? First thing is property appraisal. As a valuer, you conduct formal appraisals of real properties of land before it is sold, mortgaged, taxed, insured, or developed as the case may be. Then market value estimation. So estimating the market value of the land, building, and real estate to help clients maximize their profit from sale or rental agreements. Compliance with the standard. This is responsibility. First, these two are the function, these are the responsibilities. Compliance with the standards. Adhering to the valuation standards and guidelines set by regulatory bodies such as Insolvency and Bankruptcy Board of India, IBBI, and Companies Act. Then ethical conduct, maintaining impartiality, integrity, and ethical standards throughout the valuation process. Documentation, so preparing detailed valuation reports that include physical measurements, ownership rights, and factors affecting property value. Then error of judgment. Whenever you are doing valuation, what things will be considered as errors of judgment for a valuer? Valuer can make errors of judgment due to various reasons such as inadequate information. So lack of complete or accurate information about the property or market conditions may lead to some error in the valuation report. Then misapplication of valuation method. So basically a valuer has to apply a correct method. If incorrect method is applied for valuation or failing to consider all relevant factors, it will lead to misapplication of valuation methods. That will be called error of judgment. Then over reliance of on assumptions. If the valuer make over reliance over the assumptions or make some assumptions without sufficient evidence or verification, so it will be called error of judgment. Market fluctuations. So many times market fluctuates within a shorter time. So failing to account for sudden changes in the market conditions that can affect the market values, it also comes under the heading of error of judgment. Second thing, though there is a difference between error of judgment and professional negligence. So this is negligence, that is error of judgment. So what is professional negligence? When it occurs? So professional negligence occurs when a valuer fails to exercise care and skill expected of a competent professional, resulting in financial loss or damage to the client. Examples include inaccurate valuation, providing incorrect valuation to the due to oversight or lack of due diligence. Conflict of interest. So valuing property in which the valuer has a personal or financial interest. This is also a professional negligence. Then failure to disclose. Not disclosing relevant information that could impact the valuation. It also comes under professional negligence. Then non-compliance with the standards. If you do valuation which are not complying with the established valuation standards and ethical guidelines, this is professional negligence. So this is all about purpose of valuation as far as IBBI syllabus is concerned. So if you like this video, you may visit this is our website, YouTube channel. Visit this and like, share, and subscribe our channel for more educational videos on valuation and other related topics. And of course, all these videos are free of cost. And if you have any suggestion, please comment in the comment box. Your suggestions are always welcome. Thank you. Have a nice day.